All right, good morning, everybody. How's everyone doing today? Hopefully you all can hear me. Please type in the chat box and I'm coming through loud and clear. I'd like to say that I'm broadcasting from bright and sunny, beautiful Copenhagen, Denmark, but I'm actually broadcasting from wet and rainy, windy, and beautiful Copenhagen, Denmark. No sun today. All right, thank you. Thank you for that. Thanks for letting me know. PKLM. Is that you, Pamela? Miles, John. All right, great. Market's about to open here in a moment. A lot of what our trade plans are that we typically show have already hit really efficient, excellent targets and great profits, and much of the session is already over before we've even started. So that's always a nice sign. Hopefully you guys are taking advantage of some of these great moves we're seeing in the market. I thought I would spend some time today going over some of the Spotlight FX Alert Forex trades, our daily Forex swing trade service, even though it's called Spotlight FX Alerts. Pretty much using Counterpunch for most of those, but hitting all new record profit levels for the lifetime of the swing trade service. These trades are really paying off and patient traders are getting paid. And that's kind of how it is with these slow moving charts. It does take time, but when they move, they really move. So we'll look at that in a bit. At the moment, we've got the Dowie Mini. We're looking for a setup. We've got the soybeans setup here that just started at 8:30, and there's a short trade right here at 12:36 and a quarter. And the stop is at 12:39 and a quarter. And now a possible stop and reverse. So if you didn't get the entry, there would be a long at 12:58 and a half. And if you did get short, you'd want to get long at 12:39. So we'll see what happens here. If it does get long, the stop is at 12:35 and a quarter. And then you can see the targets. 12:40 and a quarter, 41 and a half, 42 and a half. So depending on this went pretty quick. And it looks like it's going to get long here if it goes one tick higher. Keep an eye on that. Yeah, and you actually have a swing high there at 139. You may want to go one tick beyond that if you're short. Well, yeah, then the trade would stop out. It looks like it's staying short at this point, but we'll keep an eye on it. It did not go far enough for the adjustment, but it still might. Anyway, keep an eye on soybeans. I don't know if anyone in here is actually trading soybeans on Counterpunch, but it is a long-running plan that has been winning for a very long time as well, and some of you may want to take a look at it as a potential trade plan. In the meantime, the Dowie Mini is still flat. Don't forget that energies have rolled over to the December contract. Z for December, CLZ21 for crude oil, RBZ21 for unleaded gas, for example. So far flat on the YM. Soybeans technically got short, could still possibly get long. And the pound Aussie is in a long trade. Long from 83.91, adjusting above the key level, 83.91. The stop is at 83.62. Nice sized targets, 84.10, 84.21, 84.33, and 84.44. And how about if I do this for you guys and make it easier to see? There we go. Now you can see those. Some of you with old tired eyes like me should appreciate that. All right, along on the Dow E-mini now at 35,358. And look at soybeans. Soybeans did flip to long and motored up through target 1 and getting close to its target 2. Anyone taking that who missed the short, very lucky. That did go pretty quick. If you ended up with both, this will still end up working out for you as it's now pushing up towards target 3, hopefully. On the Dow E-mini, you could see really not the friendliest price action leading into the open, but spotlight remaining flat so far. We'll see what happens here. Setup kind of self-mitigating itself so far. While we're watching the YM, and as you can see now, soybeans really turning on the motors here. It'll start trailing in a moment, hitting all 3 targets. Crude oil. Crude oil was a fast winner today. 9 a.m. mini session kicking in, setting up 1 minute after the start time, and as you could see, hitting its target 1 primary objective rather easily. 18 ticks, $180 a contract. Also hitting targets 2 and 3, trailing down and stopping out. So beautiful one and done trade on crude oil. It's also won 2 in a row in the opposite direction. You could see kind of an interesting example of the squeeze zone filter preventing a losing trade here, because even though it's a lot of space and not quite squeezed, the way the code is written, of course, is with the 50 pushing up towards the 200. When the entry lands inside that zone, and the line splits between the entry and the target, it filters out the trade. This one also got filtered out. It would have been a winner, but the reason why is because it barely splits the entry and the target. If the target had landed inside, then that trade would not have been filtered. So I like to bring this up just to remind people who seem to forget or have problems with that. Heads up on the YM, 35,351, triggering long, targeting 365. It's a small target. 365 is only 14 points. We'll accept 10 points at the very minimum. So this trade, not the most attractive trade. It's another attempt off of the 50 moving average, which has been providing support now for almost a half hour. We'll see if that support holds. The stop is at 35,327, and those who take that trade may want to push to target 2 for 23 points, which would be $115, $5 a point. That's probably what I would recommend. A 14-point target's hardly worth getting out of bed for. You know what I mean? Anyway, it is pushing through, and it did hit money management. The stop moves up, lock in your 1 tick, and it just hit target 2. So if you did what I said, cha-ching-a-ling ding. So you saw crude. Crude did amazing. The Dow E-mini's one and done. Soybeans continuing to trail here. That trail moving up. 1239 3/4. And I know I'm going through a lot of things quickly, so if you have any questions, just go ahead and ask. You can see the Dow E-mini is already stopped out. The stop is not smart enough to know to lock in the 1 tick in this case. It's actually trying to be smarter by adjusting down below the key level, because the way the stop is set, it's going to adjust around key levels, and the stop would have been at 352, so that's 2 ticks or 2 points on top of a major key level of 50. I have the calculator set to adjust it down to 49. As you can see, it adjusted to 49. But we have to know as traders that when we're hitting profit, and we've already pushed up through our target 1, even to target 2, move your stop up and pay for your commission. I don't think you want to keep a couple ticks of risk. You don't have to at that point. That's just the calculator isn't programmed for that. As traders, we just have to know better. Stop on soybeans has moved up to 12.40 1/4. YM is finished. Let's take a look at unleaded gas. So unleaded gas also using one of the diamond level trades, but this is part of the basic trade plan where we trade when the proximity gets close enough to that 20 SMA, which is an excellent pullback zone. You can see it did pull back, gave us the setup here, which produced the one and done, hitting all 4 targets and then stopping out. Unleaded gas, very efficient one and done, just like crude oil was. Taking advantage of a strong move down here. And that one also fast and efficient. By the time it stopped out, literally less than 2 minutes had passed. Maybe a little more than 2 minutes, 2 minutes and a few seconds. Not bad, huh? Hey, what do you do for a living? I work for 2 minutes and a few seconds a day. Thank you. What do you do? I dig ditches. Sorry. I just couldn't resist. It's nice to tell people at parties that you work for 2 minutes a day, right? All right. Anyway, that's why we trade. We could tell those jokes and stories. Anyway, so look at soybeans now. Soybeans pushing up. The stop has moved up again to 12.42 and getting close to stopping out. Let's look at Catapult Trader. There was a question on our Trade Hacking Club Discord channel from a longtime member, Pete. I don't know if you guys saw that. I answered him the other day, asking if how heating oil is doing with Catapult, or if everyone has moved over to grains since the exciting grains boot camp we just finished a few weeks ago. I answered him. Heating oil is hitting all new record equity highs. Today, again, was one and done with this beautiful trade. This is the version 2 trade plan, scalp and run plan, where you can scalp some pretty easy targets that get hit quite often, but then also hit the big runners. And so this is today's trade. You have to be on your toes because these trades can move quick, and you want to learn how to anticipate the low of the bar when it's forming, where the high of the bar will be. This one might have went too fast. I don't know. Automation helps. Nice looking trade though. Here's another trade. So this plan is actually a 2 power of quitting 2, where you need 2 winners and a positive result. So this would count. Here's the second one, which was a small loss. It actually is a break-even trade, but just because of the way the strategy moves the stop after the bar closes, it's showing a small loss. So the automation is now showing a third trade here, which is long from 2.5472. And this one only uses 2 targets. It uses a target 2. It combines targets 1, 2, and 3 in the same target. So basically it's targets 3 and 4. Target 3, which really gets hit a large percentage of the time, is 165% return on your risk. So if you risk $1, you make $1.65. If you risk $100, you make $165. That's a pretty nice percentage, wouldn't you say? 165% return just to get that scalp target. That's why people love this scalp and run approach so much. especially with a symbol like this, a market like this. It's so explosive and often gives you the triple digit runners here. This trade just lost. You don't have to do the power of quitting 2. You can do a power of quitting 1. You can do a number of things with this. But just to give you an idea of how it's doing, we could pull up the performance report. 2.08 profit factor, winning at nearly 70% of the time, $52 average net profit per trade. I mean, that's fantastic. That's net of all wins and losses. And literally just hit all new equity highs on the, 2 trades ago. So this is what it's done lately. Explosive. Worth learning, worth practicing. This trade plan was created actually further back. But the way it is, it's a rolling forward plan. Pretty soon this will drop off because as we go forward, we lose what happened before, right? It's only based on, I think, it's either a 90 or 120 day look back. I'll tell you. So I see several more people joining us. Good morning. Please don't forget to hit the like button. I just kind of went through all the markets that we typically follow, just about everything winning. The only thing still pending is a pound Aussie. Waiting for this to pop up here. It's taking a little bit too long. We'll look at Counterpunch and crude oil next. Yeah, the first date. So it's anchored actually. It's not actually a 90 or 120 day look back. It's going back to June 15th. But I'm only allowed, there's a limit on the data. So as I keep going forward, TradeStation will, won't let me look this far back. Let's see, maybe I'm wrong. It doesn't say. Yeah, that's June 18th. So it's starting to lose the sessions prior, as you can see. But still, the point being, it's what has happened lately that matters most, and that's a pretty strong move. Hey, Roger, good to see you. All right, crude oil on Counterpunch Trader with the 377 tick chart. Probably the longest running trade plan that we're looking at so far this morning. It's been running for years, maybe close to 7 years. 7 years, and it still owns a spot in the trade room. That says something, or at least it should. It could either start at 850 or 9. Starting at 850, we just follow the clock. Maybe this tiny little trade here you can get in sync with. You'd have to go to targets 2 and 3 and easily hit them, as you can see. Perhaps you went for a newer trade, which happened at 854. If you missed that one, for example, the stop's up here. That one came down and also hit all its targets. And then if you're starting at 9, that would be this trade again. Or if you waited for a new trade, it would have been this one. That one also hit all its targets. It's kind of hard to get this wrong. So there you go. What else? Getting in sync. Good question, Johnny. Getting in sync is when a trade sets up before your start time. So if we have an 8:50 start time, for example, and this trade sets up at 8:40 and it triggers in, up here you can see the timestamp at 8:42. And by the way TradeStation works is the timestamp is the time that the bar closes. Okay, so when it triggers in, somewhere between the time this setup happens at 8:40 and 36 seconds when that bar closed to when this bar closed at 8:42, somewhere in that 2-minute time period, it triggers in. Well, if your start time is at 8:50 obviously you're still flat. You're waiting for 850. So when 850 comes, it's on this red bar here, and I don't know if 850 happened up here, if you had time. Maybe it moved down below that setup, and then it became 850 and never went back up, in which case you would not get in sync and take that trade. But getting in sync says you can take a prior trade if you can get the entry at your start time or sometime after your start time, as long as the trade has not hit a money management level where the stop would move, or if it hasn't stopped out. So we have rules that define when we cannot get in sync with an earlier trade. But ultimately, that's what getting in sync means. It means you can take an earlier setup if the stop hasn't moved, if the trade hasn't lost, if it hasn't triggered into a newer setup, you can get in sync and take the trade. And if you think about it, that's a really useful tool, because if you want to trade a slower chart, maybe you want to trade a swing trade chart, maybe you want to trade the pound yen 4-hour chart, swing trade chart that's been winning 85% of its trades for the last 16 years, maybe you want to trade that, but you can only look at your chart, I don't know, 1 or 2 hours a day, and the rest of the time you're busy and you can't. We call that snapshot trading. You tune in during the time you can trade, you look back to see if there's a setup you can take, and if there is, you get in sync with it. So it's a good way to be able to trade slower moving charts and still benefit from them. Because slow moving charts are hard to manage. If you think about a 4-hour bar, you don't want to have to look at your computer every 4 hours, right? So we have to use tools and techniques so that we can trade charts like that without getting bogged down. So let's look at that example. As I said, I was going to show you some of our Spotlight FX Alerts trades. Our FX Alerts service is hitting all new equity highs. It's really pays to be patient with a slow moving chart, because when they deliver rewards in a big way, and that's exactly what's happening now. I'll show you some of these. Let's look at the pound yen trade. So this is the one, this trade plan I presented, I don't know, 6 years ago, maybe longer. At the time it was winning 85 to 86% of its trades over a 10-year look back. So we speed forward to today, and it's still winning 85% of its trades. And this is the latest trade here. And what's unique about this uses some of the advanced features of Counterpunch Trader, like the average true range formula for determining dynamic entries and stops. So it's a 4-hour bar, but it's only interested in taking trades that set up at either 4 p.m. or 8 p.m. New York time. Any setup that happens on other bars, it will not look at and it's not interested in. So what makes this trade plan unique is only 2 bars, 2 4-hour bars out of the 24-hour period will give us a setup with this trade plan. It's unique, and it's partly why it's been so successful, because of that particular aspect to it. So this plan, you can see, here's the setup way on the left. It took place at 8 p.m. Well, let's say you're not at your computer at 8 p.m. Let's say you don't have time to check it until 8 a.m. the next day. So that would be snapshot trading, and also getting in sync. You can see that you have another 4 hours, and you got 4 hours, and then it's 8 a.m. It's above the market. You can place your order if it were to maybe pull down. Actually, when it closes below the market, closes down here. The point is, you can get in sync with this trade because the stop hasn't moved, it hasn't stopped out, and you can take the trade even though it's set up the night before. So that's getting in sync. It's also snapshot trading. Maybe you only look to trade this in the mornings when you get up. Now, if you get up at 8 a.m., Central Time, 6 a.m. West Coast time, 9 a.m. New York time. Most of us are up at this time trading, but for whatever reason, this is when you like to trade Forex or whatever. I'm just giving you an example. And let's say that it went up to here. It has not stopped. It has not moved its stop yet. You can still place your trade in case it comes back down to hit your entry. But instead, if it goes up and it gets to the point where the stop is moving, then you just cancel the setup. You see? That's called snapshot trading. And this particular trade, look how close it got to target 3. Remember, we all know how accurate Catapult Trader is, or Counterpunch. They're all accurate. But Counterpunch in particular, along with Spotlight, uses the same formula for calculating its targets. It's tuned to market conditions. And as a result, these trades are often quite accurate. Morning to you, Craig. I just kind of went through everything that happened so far this morning. So success on just about everything. I'm not going to repeat it unless there's a specific question. But right now we're looking at the 4-hour pound yen. I was just talking about getting in sync and snapshot trading. So just to quickly take a look at what's going on with our Spotlight FX alert service, again hitting all new equity highs. It's just finally, I know it's taken a real exercise in patience, but that's how it is with daily charts. Daily charts take patience. It's like watching the race of the glaciers, because you really get only 1 bar a day. That's why it's a daily chart. And what may seem like an eternity, if you were to just compare that to a day trade, 4 or 5 months of trades might only be, a few days worth of trades in a day trade. So that's what I mean by patient and slow. But you take one trade like this one that got short. This one set up back in September and it triggered in around the last days in September here. Well, it's pushing past its target 2 right now on its way to target 3. Target 1 was good for 190 pips. Target 2 is 295 pips. If it hits target 3, that's 400 pips. Of course, we're using FX Synergy to scale out a percentage at each target and then trail. I mean, a trade like this, it literally takes less than 5 minutes a day. I mean, it takes way less than 5 minutes a day. You can pretty much manage all these charts with an average of, say, 5 to 10, maybe 15 minutes a day. Not even on an average. On an average, it's probably closer to 5 minutes a day. Some days take longer. Some days you don't do anything. But literally, that's what makes this such a great way to trade Forex, because we're all busy. Maybe we're day trading. We want to add something else to our trading. We can dedicate 5 to 10 minutes a day to monitor a dozen charts or so, give or take, and take advantage of these slow-moving and highly profitable trades. It's just a matter of patience. So the Euro Aussie, also explosive. That one's already pushed through all 3 targets. I'm showing some auxiliary add-on trades as well. These are not part of our trade plan, but you could use them. Those trades are good. But this particular trade also still live, 167 pips, 261, 355, and now trailing, looking like it's going to start maybe moving even past its target 3. I mean, when all is said and done, this one trade can end up making 1,000 pips. Who knows? Yeah, Craig, it's like watching paint dry, but the beauty of it is we don't sit here and watch it. I mean, you can go ahead and paint your fence and then go away and let the paint dry without watching it. So that's the point. Well, the other good thing about something like this is that you remove yourself from the equation, right? Because a lot of times we end up sabotaging ourselves. If trade feels uncomfortable, you try to affect the stop, you deviate from the trade plan, you kind of get in your own way. That happens a lot with traders. But when you have a trade plan and a way of trading like this, and you're only giving yourself 10 minutes a day on average to be in front of your charts, maybe it's a little longer because you might do this at the end of the day when you get home from work or whatever, and then once in the morning, just in case you have to move your stop. And that's basically it. So you remove yourself from the equation. You got the entire trade being managed by a great trade managing platform like FX Synergy, so it's going to know to exit at these targets. It's going to know to move the stop to break even when it's supposed to. At the end of each day, you can then manually move your stop. Takes like 10 seconds to change it, so you can take advantage of the trailer. I mean, I don't know. It's one of the best ways to trade because it's the least imposing on your life, and it really fits the theme of Backpacktrader. Less is more. So look there's so many great ones. The pound US is not even part of the plan, so we wouldn't look at that one. The euro pound is, and that one got short, and it already has hit its money management level. Has not quite hit target one, it barely missed, but the stop has moved down a little, so it's profitable. I'm just going to hold that and see what happens, obviously. But then take a look at the euro yen. The euro yen actually got long in the white trade. We have our stop and reverse adjustment that we always move down. We try to protect the trade we're in and not flip over to short unless the price moves through our adjustment. And so even though the green trade shows a strong winner, it's the white trade that we're still in because it never got short. So almost hitting target 3. I got some lines here from the past. Just get rid of those. So, I mean, just to give you an idea, 171 pips, 267 pips. If it hits target 3, that's 363 pips. And because they're both trailing the signal line, we can just borrow the green trade's trailer, and that's going to correctly trail the white trade now. And you can see the trailer is just starting to move higher and higher. So the potential of this trade is quite vast. Who knows how far it can go, but very profitable. And speaking of, we saw the pound yen 4-hour chart. Check out the daily chart. Same type of deal. I can't remember if it flipped. I'd have to check with Kevin if it got short or not. If it did, that would have been a couple losses. But then the green trade, maybe it stayed long. I don't know. I have to check. I've been traveling and right in this time. But anyway, you can see, regardless, let's say the white trade stayed long. I mean, that's literally 1,000 pips. 251, 387, 522. It's more than 1,000. It's getting close to 1,200 maybe. The green trade, even more. 261, 402, 543. Huge trade. And that can go and go. Yeah, well, there has been some drawdown, but when you're putting on the proper risk, I mean, there's drawdown in all trades. So you have to trade these positions small. You don't want to risk more than your 2% per trade. So if you're not adequately capitalized and you're over leveraging, then drawdown's going to hurt you no matter what you trade. Okay, so John said it did not stop and reverse on the service. Great. Well, and mainly because but you did on Awanda. Yeah, that's one of the tricky parts to Forex. Obviously, the TradeStation data is not the same as other brokers, and you're using Ninja on top of that. You have to maybe give a little wider adjustments to try to account for variance. There's no perfect way to do it, but just looking to the left, you do have a pretty significant swing level just below the 200 moving average with some really large targets down below. So adjusting below that level hopefully should have kept you in the trade. I don't know what size adjustment you made, but yeah, it's true. There's no perfection, and I'm sorry that happened. At least you got the green trade. Hopefully. Anyway, yeah, that could happen too. I know Awanda and TradeStation are pretty darn close with their quotes. I've noticed they're not that far off. Like, they're really close. This pound Swiss is not part of the Spotlight FX alerts, but I'll show it to you anyway, because this is using an old friend that maybe some of you may remember. It's been a long time since anyone's ever mentioned it, but this is actually a look at Trend Jumper. Anyone remember Trend Jumper? Oh, that's too bad, John. Yeah, maybe the adjustment wasn't large enough. That's bad luck when that happens. Trend Jumper is something that I was thinking of reviewing again. It happens to work really well with Forex swing trading. It gives you a much faster trade, smaller trades than Counterpunch. This is not the most attractive looking chart. I'm not saying I would use this chart, but it works similar in that you got your little entry, you got your targets, but it's based on the single bar setup and a different type of setup. And Trend Jumper actually has always worked really well with daily charts and Forex. That's why I bring it up. Just going through these really quick. The NZD USD got long. This is a custom chart. The stop has not moved to break even, but it's moved to cut risk already, and now pushing up, almost getting to target 1. Be good for 107 pips if that hits. And the US Swiss. The US Swiss has produced some really nice winners. If you go through this chart, you see mostly winners, not 100%, but a lot of winners. Currently short. US Swiss currently short from 92.10 or 92.09 or whatever, and we'll see if it can push through. So that one just kind of newer trade. And then the Aussie yen. The Aussie yen, also big winner. 402, 296, 191. When these trades close, it's going to push the results of the Spotlight FX Alert service to all new equity highs. Not exactly sure, but it's probably going to be up over 13,000 pips, maybe more since the service started. Again, these take patience. You can go for several months where you seemingly not making any progress, or you're a little bit underneath your equity highs, and then you get all of a sudden the movement that occurs whenever it occurs. These are slow again, but when it happens, it typically happens in a big way. Anyway, that's the Spotlight FX Alert. The H2V2 plan. Well, let's take a look at it. I mean, it should be on there. If it's not, that's possible too. I had several versions. This just happens to be the one that I had access to on this laptop, so that's probably why I'm looking at it. Just to quickly check, you can check your settings against this and see if you want to use this one. Test it out for yourself. It's basically, you got default settings, default, pretty much default. Okay, so it's using a different set of catapult lines, a 3 and a 13, so that's different. 3 and a 13. If that's not on the site, I'm happy to put it on the site. It also has the 9:05 start time. It's only, this one has it's a scalp and run with a target 3 and a trailer. You could always do target 4. You could analyze and see if that might be better, but this is keeping things really simple. It's a power of quitting of 2 winners and a positive result, up to 5 trades total. And that's basically it. So really, the only thing to know is the position, target 3 and trailer, the power of quitting, the start time, and the difference in the cat lines, 3 and 13. Everything else is pretty much default. Yeah, it's the V2. Says in the notes the 313. That's about it. Johnny asking, and so each screen had a 3-step sniff test, right? Well, maybe more than that. And at the end of the session, do you manually enter data into UTA, or is there a syncing function? No, you manually enter it. Whether you do it at the end of the day, the end of the week, after you're trading, if you're forward testing a current plan going forward, you probably do it at the end of your session. If you're back testing your fast test of the last, 90 days or 100 days or whatever, you would go back and manually build your trade log. It just depends on how you're using the UTA, but it is manual, and that's actually good news. You want it to be manual because it's that manual effort is where you learn the most. Being able to run an automation and get great numbers is a nice big picture look, but it's not going to help you build belief. It's not going to help you see how the trades actually unfold, and then to think through them step by step like you would with the manual back test. You just get exponentially more out of that process, which is why we do it. Something else we were looking at on Monday, I want to bring up again. We could look at a few different versions of this. Was the MNQ with the custom Renko. I know there was a lot of interest in that. I'm certainly interested in it because these charts look incredible. Dawn asking, can you show the mini NQ Renko? You and I are on the same wavelength, aren't we? I pulled it up and then I saw your comment and you asked for it right when I was pulling up. Nice. So remember I said it's probably worth waiting maybe 4 minutes or so, a few minutes before starting right away, and that's because right at the open you get this flurry of bars. Sometimes you do, sometimes you don't. So let's just say 4 minutes because that's kind of what we used on Monday. So here we are at 8:30 and 50 seconds. By the time we get to this bar here, it's been 5 minutes. So not a lot of time passing. You can get in sync. Well, you can't really get in sync because this one would have stopped out. So that would mean this would be the next trade. So the first trade's going to lose. This one comes down, doesn't go far enough. It's going to lose. Flips over to long, and that gets you a nice winner. Target 2. I don't know if target 1 is really where you'd want to take profit unless it's a really large target, but really it's up to you. It's a micro. If you could afford multiple contracts, you're going to have to do your own testing to figure out the best places to take profit. I haven't done the work yet. I haven't figured that part out. So then the next trade here. And that one also gets to target 1, but not quite to target 2. It's going to flip to long. And also only to target 1, but that's a larger target. It's 12. Are those points? Let's see. Yeah, those are points. So that's 12 points. 426 to 438 and a half. Doesn't look. Oh, yeah, it does. Yeah, 12 points. So 12 points might be worth taking profit at. And then you get this. That one comes all the way down. You just got to stay with it. Fish are going to get away, but it's when you get the nice, big, strong moves that it pays off. But there you go. Dawn, let me know if you have any questions on that. But this is not a trade plan yet. This is a chart that's very interesting that we're looking at and discussing. Creating the trade plan for this, I could see it going a number of different ways, and it really just depends on, a few different things. I think there's a lot of ways to get it right. The thing I like is the charts are cleaner. Yeah, it sure does, and you're right about the NQ mess. I agree with that. And the mess of any chart, really, or any symbol, because these Renko charts are clean regardless. So I agree, and that's one of the reasons why so many people are attracted to these charts. Also, I have the counterpunch dots on the chart just to show how this can work equally well, maybe better, I don't know. Again, this is where testing comes in, but Counterpunch Trader can be used, and Spotlight actually could be used as well. Any one of those three strategies I think would do very well with this chart, actually. It's hard to know which one would do best until some thorough testing was done on all three. But I have the catapult on here with the targeting. I put the counterpunch dots just so that we can quickly compare the two, and it's easy to just draw the targeting on this. So you can see that it makes for larger targets. So but you can you also have larger stops. So which one were we looking at? Were we trying to decide if we would have taken it or not? Like this one here, it looks like whether you take it or not would have stopped out on catapult, but on counterpunch, it would not have stopped out. The stop is up here. Didn't quite go far enough, though, to get to its... Well, here's the first target, actually, right there. Maybe the first target is something you want when it's this large, but you can see how, because the stop is bigger, the targets are bigger, and the trade has more space. And some people like that, and that actually might be a better way to handle this kind of Renko bar. I don't know. Catapult looks really good, but so does Counterpunch. It's like an embarrassment of riches when you have so many great choices. Again, both Counterpunch and Catapult, they tend, on this particular chart, to give you the same setup bar. Because it's on the third dot is usually when the Catapult lines are crossing. So I've noticed that over and over again. Usually it's the third dot when the catapult lines are crossing. So then it's just a matter of what kind of trade profile do you want? Do you want the tighter stop? Or do you want the looser stop, which is the 3-bar setup instead of a 1-bar setup, and then the larger targets? So you can probably make an argument for both. We know Counterpunch is very accurate. There's target 2 being hit right there on the nail. Food for thought. And just to give you an idea of how this Renko bar on a 6-point micro NQ cleans up the mess. Let's look at a 6-point. Well, this is a full NQ. We could change it to a micro. Let's take a look at the momentum bar. Oh, this is different because this is the EMA crossover on Spotlight. So there's some really good trades on here too, actually. It just doesn't look anywhere as nice as the Renko. I'm not sure this is a chart I actually like as nearly as much. I'm sure it isn't a chart I like as much. Let's see. Let's do... Here's a 4... Let me look at this for a second. Oh, that's just Counterpunch. Counterpunch with a 4-point range bar. Yeah, it looks a lot noisier, doesn't it? There's some really good trades on there, for sure. But it's also faster because it's only a 4-point bar. But yeah, you can just see the difference between this kind of bar and a Renko bar. I need to close some of these charts anyway. I got too many things open. Let's see what other Renko charts I have here. We can take a quick look. We have to pay attention. Actually, here's the thing. The crude oil session's about to start in 12 minutes. I need to stop this session so I can restart the crude oil session and get the recorder set up and all that. So please hit the like button if you like this session. I'm going to end this stream. You're all going to get kicked out of it, so you're going to have to log right back in with the crude oil session. It'll take me about 5 minutes, and then I'll see you back in here, and we'll trade the crude oil inventory report. All right, so see you guys in a little while.